FAIRtax is coming, don't stand in the way. FAIRtax is coming across the USA. FAIRtax is coming, clean up this mess. We got to get rid of the IRS. Hey, hey! Hey, hey!
Hello and welcome once again to FAIRtax Power Radio. I'm Bob Paxton.
And I'm Ron Malero.
And we are
The FAIRtax Guys.
And we've got another fun show for you today, Ron.
Yeah. My wife found this on the IRS website. I mean, it's a whole, it's a website that you can barely understand, but there is this one sentence. Finally, the Internal Revenue Code is complex, and its sections must be read in context of the entire code and the court decisions that interpret it. So, what does that mean? I mean, that's a simple sentence. In order to understand the tax code or any part of the tax code, like a deduction or something, you have to understand the entire code, all 70+ thousand pages of it.
In other words, what it looks like might not be what it actually means if you take it in context of the whole thing.
And it gets worse every day, that we've talked about before. Congress makes a change almost on average of one change per day they're in session. And it's just getting worse and worse.
Well, the question becomes, when are they going to run out of material to put into the tax code? As I said, this is going to be I don't get to sling arrows at you like I did a couple of episodes ago. But what we're going to do over the next couple of FAIRtax Power Radio episodes is we're going to look at some of the wild and crazy things that actually are in the tax code.
Yeah.
And something we haven't been hitting on too awfully hard here on FTPR was, of course, the IRS is a corrupt agency that needs to go away. But we've also got another little villain here called the tax courts. Because sometimes, believe it or not, the Internal Revenue Service actually does act on the side of sanity, and the tax courts step in and change that. And, of course, the court decision becomes part of the case law supporting all the code. And there, that little thing you just read says you've got to understand all of it in order to understand any of it.
Yeah, so it's not just the tax code. It's the court decisions that go along with the tax code. That's why they talk about 75,000 pages of tax code instructions and court decisions.
Okay, well, let's go ahead and dive in here because this is going to be fun, taking a look at some of the things that your politicians, and I can guarantee some campaign cash changed hands on just about all of these things to get them into the tax code. Let's look at what's in there. So grab the first one there.
Okay, maximizing the look of your muscles. Okay, the tax court ruled that a professional bodybuilder who uses special oils to prepare for competition could deduct the cost of those oils. What's not deductible are the wheatgrass shots and the buffalo meat he eats to tone his form.
So if you go buy baby oil, that doesn't count. But if this guy does, since he's a bodybuilder, it does.
Yep.
Now that sounds really fair.
Yeah. That's a rather mild one. We have some really good ones here.
Oh, I got a really good one. We know that business expenses are deductible.
That's right. Like you buy a computer or something like that. You buy a pickup truck for your business.
Mm-hmm, something like that. But dig this. If you are an exotic dancer.
This sounds like a touchy subject,
yes.
Bob.
Well, there actually is a case where an exotic dancer, and I will not mention her name here, she decided to, shall we say, augment herself and got implants that blew her up literally to like a size 56 FF. I mean, I've seen the picture. It's not natural.
No.
But she got these huge breast implants now and deducted those as a business expense. The IRS originally, this is one of the times where the IRS showed some sanity and says, no, that's not deductible. But she went to tax court, and the tax court changed the IRS's mind and ruled in her favor and says that she can deduct the cost of these huge breast implants as a business expense given the business that she's in. Now, what kind of can of worms does that open?
Well, yeah, because if you do that for one person in the entertainment business, what about somebody else who's in the entertainment business who gets a nose job? or gets a tummy tuck or something like that. It opens this up to all kinds of things for people in the entertaining business. So, I mean, you got to wonder in that case there with the exotic dancer, was the judge or judges, were they male or female?
I do not know.
Neither do I, but we can take a wild guess.
Yeah, but
anyways, it's just amazing what happens. You make a decision like that on that one particular case, and then you open it up to all kinds of crazy things happening.
Yeah,
right?
but of course, that opens up an incredible amount of unfairness, because there are a lot of women who would like to be augmented, not to the degree that this lady was, I don't think, but for some to be able to take that deduction and others not. You cannot justify that in the court of fairness.
Yeah, but there's a good way to avoid it, isn't there? You get rid of this whole crazy tax code.
Why don't we just get rid of the entire tax code?
Yeah,
that's a good idea. So we've got.
Okay. I've got a good one here.
Go ahead.
The starving artist deduction. Now, this is a little bit lengthy, but bear with me. Performing artists get a deduction for expenses they incur while employed under certain circumstances, which seems almost ridiculous in their specificity. They have to have at least 2 employers and receive at least $200 income from each employer. Job-related expenses are more than 10% of income from performing artist jobs, and their adjusted gross income cannot exceed $16,000. Now you got to put all those things together. They got to have at least 2 employers. They got to earn at least $200 from each employer. They have to have 10% and all this stuff. How does the IRS get so persnickety like that? How do they come up with these things for these poor starving artists?
Some poor starving artist has got a really good tax lawyer.
Well, yeah, but then they're not a starving artist, are they?
You wouldn't think so. Oh, that's crazy. But
all right.
Okay.
How about
you ready for the next one here?
Yeah, go ahead.
Okay. There's a fella named Bruce, and I don't know his last name. It wasn't listed here, but he had a live-in girlfriend. And he decided to hire her. He's had some rental property and stuff like that. So he, on paper anyway, hired his live-in girlfriend to be his rental property manager, to run his personal household. And in that way, he could deduct her salary, the money he gave her, that she was probably going to get out of his wallet anyway, that became a deductible business expense. Now, they did not let him get away with paying her for her housekeeping. But they did let them get away with he gave her a salary to manage his winter property, and this is his live-in girlfriend. Now, how can that be abused? You wouldn't think that would be abused, would it?
And the thing to keep in mind, folks, is that all these deductions that either the IRS or the tax courts allow reduce somebody's tax bill, which is nice for them, but what does it do for the rest of us? Somebody's got to make up the difference. And so all these deductions cause more ripples through the tax code, and the rest of us end up having to pay more.
Yeah. So if you've got a live-in girlfriend and rental property, you can get away with it. If you've got a girlfriend and not rental property, you can't get away with it. Again, the same thing is being treated differently for 2 different people, and that's not exactly what you call fair.
Yeah. So let's see. Some more bizarre ones. How about orchestral orthodontics?
What?
Yep. Can an overbite be cured by a clarinet? The tax man says yes.
Are you kidding?
In the case of a girl with an overbite whose doctor recommended therapeutic clarinet lessons, the music lessons were deemed a medical expense by the IRS. Yeah, dead silence.
So
because
if you play the clarinet, you can get a deduction. If you play the trumpet, you can't.
If you have an overbite. You've got
mercy.
to have the problem of an overbite. So this becomes, a medical expense. So now I wonder what the girl in the clarinet sounds like.
I don't know.
I don't think I want to know, but but the parents can deduct the cost of the lessons as a medical expense. Now, where you put that on your 1040, I can't imagine. But anyways, that's what it says.
But I don't play the clarinet. I play the guitar, and I want an exemption.
Yeah. Well, let's see. Do you have overgrown nails or something?
No, I keep them trimmed, nice and neat.
Maybe you got problems with your lungs that doesn't allow. No, you do sing and play the guitar. Yeah, I don't know, Job. I'm not sure if that sort of job can be declared a medical expense in your case. You're just out of luck, Bob.
Oh, mercy. Oh, well, ain't the first time.
So, all right, what else you got there?
Okay, I've got the California cat lady. Now, she decided that she is going to care for these, stray cats and whatnot, and decided that the vet bills and the cat food and the supplies that she bought would be deductible as a charitable contribution. After all, I'm being charitable to these cats,
Yep.
And the IRS said, nope. The tax court says, yeah, you can do that. And there's another one. This is really good. A second cat deduction. There was a couple who had a junkyard. And junkyards kind of sometimes tend to attract varmints like rats and snakes and things like that.
Yeah.
So this couple, they put out, just cat food and stuff like that to attract not even their cats. They didn't buy cats. They were trying to attract just wild stray cats that went by to keep the varmint population in their junkyard down, to make it a safer and somewhat nicer place for their company or their customers. And they claimed the cat food that they were putting out to attract these stray cats as a business expense. And again, the IRS said no way, and the tax court said, sure, why not?
Of course, yes. We're all friends here.
Oh, mercy.
Yeah, so
if you want to attract stray cats, you can deduct the cost of their food. If you've got a junkyard you need to keep clean. If you just like stray cats, you can't. Again, somebody gets the two people doing the same thing. One of them gets a deduction, the other one doesn't.
Yeah, it's. I thought you were going to say that they were watch cats or something. They were keeping an eye over the junk in the junkyard.
Well, they could be.
Yeah. You never know. But so let's see. Here's another one. Oh, I love the headline, the title on this one. Red nose, yes. Armani suits, no. What's the difference between a lawyer and a clown? Well, we're not going to really answer that.
You're tempting me.
A financial services.
I've got some friends that are lawyers, so I got to be kind of stand up.
Exactly. All right. Well, you might say the clothes, and you'd be right. The lawyer's impeccable suits are not tax deductible, but the clown's costume is, including his big red nose. It has nothing to do with taste and everything to do with the usability of the clothes. If you can wear it somewhere else, it's not deductible. That kind of makes sense. A clown's costume, how many clowns do you see wearing their costume to church?
I don't know, but I see a bunch of them in Congress.
But they don't wear their costumes.
I shouldn't have said
They wear their Armani suits.
Oh, yes.
Yeah, and supposedly they're not deductible.
But I bet you they get deductions that we don't.
Yeah. So anyway, red nose, yes. Armani suits, no. Okay.
Here's another one, babysitters. Usually, a babysitter is just a personal expense. It's not something that's deductible. But the tax code now says that if you do charity work or volunteer for charity work, and you have to hire a babysitter to watch your kids so you can go do that, then that babysitter is deductible.
Huh.
Which I guess is nice for charity work. But again, it's not fair that you get to hire your babysitter as a tax deductible expense and I don't.
Yeah, and that's voluntary charity work. Okay, and they're getting a write-off for it. So, again, you say that it puts everybody else at odds because every deduction that somebody gets means somebody else, other people are going to have to pay more. Yeah. And you really have to question the sanity of some of these decisions.
Yeah, but it's true. But when there is a deduction, either babysitting is deductible or it's not. It should not be deductible for some people and not for others. So it goes down to a simple case of fairness.
And it gets so complicated. And again, is there any wonder that our tax code is over 70,000 pages? I mean, when you, again, counting the legislation, the regulations written by the bureaucrats, the instructions written by the bureaucrats, and the court decisions that go with them. when you add all that up, you get tens of thousands of pages of stuff that no one person can possibly understand. That's why, for individuals like us, we buy software, and and even then you still have to struggle with it a bit.
Oh yeah, I say I'm got a very simple tax return,
Yeah.
and it still took me about 2 hours with TurboTax to do it.
Yeah.
And it shouldn't take me any time because I should just pay it at the cash register when I buy stuff. Now, wouldn't that be an easier way to do it?
Oh, absolutely. You just like 45 of the states that we have that have a sales tax right now. You go to the store, you buy something, your taxes are included when you pay for the product. You're done.
The government doesn't have to know who you are, how much money you make, how you made it, or anything about you. You just pay it anonymously at the cash. That sounds like a whole lot nicer system than what we've been talking about here for the past little bit.
Yeah, because we're going to go through some more of these and just try to hammer home the point that this tax code really is not helping us, and it's just getting worse by the day. Okay, here's one that could be a problem not only for your tax situation, but within your family too. Capital loss rules dictate that if you make a legitimate loan to someone with an official note, even if it's your brother-in-law, you can write off the money if you don't get paid back, up to $3,000 a year. Now, what happens if it's just a handshake and you lend your brother-in-law a couple $1,000 and he refuses to pay you back? Well, then you're out of luck. You can't, because there was no contract. So even with your family, if you do the charitable thing and somebody's in a tough spot and you lend them some money, you're going to have to insist on a contract, which that in itself is probably going to cause problems. What? Don't you trust me?
No.
And, just think of that. So, but that's the way it goes. I mean, if you don't get paid back, if the person really gets in a mess and is not able to pay you back through no fault of his own, if you don't have a contract with this person, you're out of luck. You can't deduct it. So that can raise some hackles, within the family there. And we've all heard of these horror stories within the family of things happening like this, and brothers and sisters not talking to each other, and so on. This just makes it worse. So, but that's the way it goes. If you're going to give somebody a loan, or you're going to get a loan, expect a contract. You have to have something in writing.
Oh, mercy.
Yeah, that's not good.
All right, here's another goodie. If you have a home office, which a lot of people do, work at home. Now, the IRS looks at deductions for that situation pretty closely, and they're pretty sticky about what you can and can't deduct as a home office. But there was a feller who regularly met clients at home in his home office and was able to deduct the cost of his landscaping and lawn mowing and stuff like that. Stuff that you have to do anyway, but since you've got a home office, that's deductible for him, not deductible for you. Sorry about that.
Yeah.
And there it is. Now, it wasn't all deductible, but the tax court did this and, again, ended up in tax court. Allowed part of his landscaping and lawn mowing and even driveway repairs. Stuff that are just plain old expenses for any of the rest of us become deductible if you've got the right situation.
You mean I just planted a new little orange tree in my backyard and I can't deduct that? Nope. Oh, how unfair.
It is.
Yeah. So, anyways, and it continues, and it doesn't get any better. Now,
I don't know if this one's on your list, but you were telling me the other day about something about whaling captains.
Yeah.
Remember that?
Yeah, that's you're reading my mind, Bob, because that's the one I have up next here.
Okay, whaling is illegal in this country, is it not?
Bob, you're giving it away.
Okay, go.
You stole my punchline.
Oh, sorry about that.
A whale of a deduction. As of 2004, whaling captains are eligible for up to $10,000 in deductions on ship repairs, as well as equipment purchases and other whaling expenses. However, as Bob said, since whaling in the United States is banned for all but Native American cultures, you might find it a bit difficult to make this one work on your boat, because you can spend all that money, but you can't actually use your boat to go out and hunt whales.
Oh, sorry, I didn't realize that was on your list.
Yeah. So you can deduct the expenses for equipping your whaling boat. You just can't use the whaling boat. and again, both of those are federal laws. Both of them are federal laws.
Oh.
So, yeah, it's a little nuts.
Oh, that's insane. I got another one here that says, if you're changing jobs, the IRS says you can deduct your moving expenses, but now it says you can also deduct your moving expenses for your pet. And they aren't even subject to the alternative minimum tax.
Does the pet have to fill out a 1040?
I don't know. Probably.
Yeah, I wouldn't be surprised.
Oh, man. But
Yeah.
we've gone on for about 20 minutes now. You got another one over there?
Yeah.
Okay.
I like this one. Does your child have an overbite? Well,
We've already done that one.
not only a potential cure for the overbite, but we can make it tax deductible for you. It's a win-win situation. Yes, indeed. Let's see. If your child has an overbite, you might want to enroll them in clarinet lessons.
I thought we'd already done that one.
We did. What?
We've already done that one.
Okay. Senior moment.
That's okay. You're allowed.
Actually,
That's what happens on live radio, folks.
Okay. Well, anyways, 1962 provision allowed them to deduct because apparently playing the clarinet helps with your overbite. I'm not sure what the clarinet playing by a young person would do to your hearing, but anyways.
Well, go to the one on drug dealers.
The drug dealers.
Yeah, that's near the top of the list over there.
Yeah. That one. If you make your money dealing in illegal drugs, illegal drugs, getting your taxes right might not be high on your list of priorities. But just because the money made illegally doesn't mean that the IRS won't accept taxes on it. So,
I know you can deduct gambling losses, and that's not legal in most states.
Yes, and apparently if somebody gets caught, dealing illegal drugs and makes money on it, the IRS wants their due. All right, the tax court has clarified some potentially helpful details on the situation. Remember, sometimes tax evasion is easier to prove more than insidious crimes. Can we think of Al Capone?
Mm-hmm. That's what they got him on.
So, as it turns out, the baggies and the soil for marijuana plants are not deductible. However, the cost of your product is deductible. Those of you in the audience that is thinking about becoming a professional illegal drug, lord, make sure you know what's deductible and what's not. I mean, this is just bizarre.
Oh, and
we're getting into deductibility of things for illegal drug dealers? Come on. No wonder the tax code is so out of control. This is crazy.
Oh, yeah. What people are allowed to deduct is just insane. But as we mentioned earlier, it's the fact that if you've got the right attorney and you've got the right situation, you can get a break, or I can get a break that you don't get.
Yeah.
And that is just fundamentally unfair. And the tax code is just rife with all this kind of stuff. And there's no fixing it. There is no rearranging the deck chairs on the Titanic, if you will. We have got to yank the whole thing out by the roots and start over.
Yep. How about a deduction for your dog?
I don't have a dog.
Yeah. Well,
that's not fair.
Okay. Well, that's going to be a problem. As a business owner, if you use an animal to protect your property, you may be able to deduct a portion of the costs of caring for the animal from your taxes each year. Okay?
Yeah, but do you really want to keep those that level of detail on your records?
It's just
it requires you to do record keeping in just infinite, exquisite detail. That's more trouble than it's worth in a lot of cases.
And again, just more pages to the tax code. More pages to the tax code.
Oh, mercy. I tell you what, we have gone over some really, really kinky stuff here in this past hour. And next episode, we're going to go over some stuff that is not quite in law yet, but they're working on it. Yeah. There's crazy stuff that's in there. There are some equally crazy proposals that the politicians want to put in there in exchange for campaign cash, no doubt.
Yes,
And,
because
we'll look at those shortly, but let's turn our attention now for just a second on how we can get rid of this whole system. And again, just fixing it or manipulating around the edges is not going to fix the problem. A flat tax is not going to fix the problem. It's not going to stay flat. The fair tax, pulling the entire income tax system out by the roots and replacing it with a national retail consumption tax, is the only thing that's really going to work here.
And time is critical, folks. As you know, we're in an election year. All right. We have in the House of Representatives the Speaker of the House, Paul Ryan, and the chair of the Ways and Means Committee have committed to real tax reform, what they call real substantive tax reform.
But it's still going to be up to we, the people, to make sure that it actually is substantive tax reform and not just a little maneuvering around the edges and patting themselves on the back for a job well done.
Yeah, absolutely. Now, in Kevin Brady, the chair of the Ways and Means Committee, he's been a fair tax co-sponsor since the very beginning in '99. Paul Ryan has a different plan. Paul Ryan is the Speaker of the House. Not only that, I learned over the weekend that it is the Speaker of the House that sets the agenda for the Ways and Means Committee, not the chair of the Ways and Means Committee. So, anyways, they're going to work on this. They're going to hold hearings. They already have had a few hearings. They're going to have, I believe Rob Woodall is going to go in there to the full House Ways and Means Committee. And we've been told to get our experts in line because they're going to have hearings. But they're not going to actually promote a particular tax plan this year in 2016. They're going to wait for the new president, whoever it is, to be inaugurated next year. Then they will come up with a substantive tax proposal. We have to make sure this year, the remainder of 2016, that the fair tax is front and center. One of the best ways you can do that is go to bigsolution.org. bigsolution.org. This is where you can get involved. The website is fully functional now. There's a connect button where you connect, and you connect with the Americans for Fair Taxation. You give it your name and address. That way they know what district you're in, who your two senators are, who your representative is, and you'll be signed up for Fair Tax Friday, which is a good newsletter, that obviously comes out every Friday. Okay. Then there's a support button. There's things you can do to support our efforts, and you're going to see more as time goes on. There's a contribute button. This is very critical. We encourage people to join what we call the 1040, or it should be the Eliminate the 1040 Club, where you commit to donating $10.40 every month. If we get a number of people doing that, we're going to be in good shape, and we're going to leave ourselves open for bigger donations from some deep pocket donors. So go to bigsolution.org, and then finally the build button, or build or login at the top of the page. This is where you can help put in names and emails of your friends and family, and they will get an email saying your name has been submitted by this. Now, if they don't want anything to do with it, they click no. Okay, and nobody will ever bother them again. But this is how we're going to build our database up to 1 million people. So that build button is very, very important. Bigsolution.org.
Yeah, we need
Please
big
go
numbers
there.
to get these Krunger's critters' attention.
Yeah.
All they worry about is
numbers.
Numbers. Is this position? If I'm for this, is it going to win me votes? If I'm for this, is it going to cost me votes? And they just figure on what what's going to get them the most votes. And so the more people we have in an organization demanding the fair tax, the much better chance we're going to have to get it through.
And if you want to contact us, you have a complaint, you have a question, whatever, thefairtaxguys@gmail.com. thefairtaxguys@gmail.com. How we doing, Bob?
Oh, we're going to have to wrap it up here in just a second or two, but we do have time to remind everyone we also have a Facebook page.
That's right.
So if you're on Facebook, go to the Fair Tax Guys. If you've got an IRS story or a question or anything like that, just would like to interact, if you want to talk with your fellow Fair Tax supporters or ask us a question, that's a good way to do it.
Yep, please contribute.
Okay, so that is going to wrap it up for this edition of Fair Tax Power Radio. Thank you so much for listening. I'm Bob Paxton.
And I'm Ron Malero.
Again, we are the Fair Tax Guys, reminding you that America's got big problems. The fair tax is America's big solution, and once you understand it,
you'll demand it.
Fair tax is coming, don't stand in the way. Fair tax is coming, across the USA. Fair tax is coming, clean up this mess. together.